it's not about you. It's about taking care of your family.
Says the guy with no family and no life insurance.
See, that's where you're wrong. I may not have kids, but I do have family, and I have life insurance.
Why do you have life insurance? All right, you're single. You have no kids. What?
As you might recall, I do have a mother. If anything ever happens to me, I want to make sure that she's always taken care of.
Wow, I'm actually really glad they touched on this. I'm a big fan of people getting some initial term coverage in place even before they would have what is traditionally thought of as an insurable need. Hey everyone, today I'm going to be reviewing an episode from season 3 of Are We There Yet? Now, I'll be honest, I actually hadn't heard of this show before a colleague shared it with me and told me he thought this episode would be a good one to react to. However, I do like Terry Crews, and he plays one of the main characters, so I'm eager to check it out. Without further ado, let's get started.
What are you doing? Long day?
The next time I agree to work with college kids, please kill me.
As a university professor, I have no comment on her statement there.
Oh, babe, don't forget this afternoon we have that appointment at the life insurance office.
Okay, I know I'm stopping you really quick here, but as a brief point, it is a little old school to have to go into an office to buy life insurance these days. You can certainly do that if you would like, but I've assisted a number of clients all around the country this past year, and I don't think I've met with a single person face-to-face if the need was just life insurance. With Zoom, phone, DocuSign, and everything else, you really don't have to meet face-to-face to buy insurance unless you want to.
Oh, that's today?
Yeah, I told you last week. Why?
Oh, I was just gonna, since you were busy with your project and, I'm running around with the kids, I was just thinking we push it off till later.
We pushed it off for months already.
Okay, so I would say this is actually very normal behavior here. Life insurance and estate planning are two of the absolute hardest things to get people to take care of. It's probably not coincidental that both deal with death, and that alone can make people quite averse to dealing with it. Confronting our own mortality can be uncomfortable, and it's often easy to put it off. In a recent video, I talked about Ron Swanson's estate plan and the concept of mortality salience, which refers to a term that comes from terror management theory and relates to a sort of existential anxiety that we can feel as we engage with topics that make us face our own mortality. On top of that, buying insurance is often one of those things we can feel like we can always put off until tomorrow. It's never as urgent as paying the mortgage or running kids to a soccer practice or finishing up a project for work. So it's very easy to just say, we'll get to it tomorrow, and tomorrow never comes.
We need to get this done.
I'm just saying, I thought we would do it later, because right now our lives are so hectic.
Nick, we have 2 kids, 2 jobs, and crazy in-laws. Our lives aren't going to get any less hectic.
Oh, she is so right. I can remember being a college student and actually being naive enough to think, and this is how dumb I was as a college student, that I'm going to have so much free time when I'm done with school. Then you get out in the real world and you realize that work will keep you busier than you thought. And then if you get married, have children, need to run those children around on top of everything else you need to do. Yeah, at least during the years when you're going to need life insurance the most, it isn't going to get less hectic. So kudos to her for calling him on this. I personally got my first life insurance before I was married, and I often encourage other people to do the same because life will come at you fast. If you have a need for life insurance, or even if you plan to have a need for life insurance in the near future, I would encourage you to start that process today and don't wait.
Why do you keep trying to avoid this?
Because I'm superstitious, okay?
About what?
I've seen stories of people who died in freak accidents right after they signed their life insurance policies.
And by stories, you mean movies?
No.
Yes.
Maybe.
Honestly, the superstition about dying after getting coverage is a bit odd to me. It's not something I feel like I've personally encountered, but then again, maybe some people are feeling it, like Nick did here, but try to conceal it.
Conceal, don't feel.
And perhaps blame it on something else. We all have weird emotions and behaviors around death, so I'm sure this could be someone's real emotions. But I just wouldn't say it's among the more common objections or barriers that I see for people getting life insurance.
Nick.
What? Art imitates life. Why are you laughing?
You are not going to die in some freak accident.
How do you know that?
I don't, but if you do, we need life insurance.
Okay, again, she's right. Nick is putting his family at risk here. They're a dual income household and his wife and children rely on him. He should absolutely have life insurance to make sure his family is protected if something were to happen to him.
Mr. and Mrs. Kingston-Persons.
Now, one quick detail about the show here for those who might not be aware. The insurance agent said Mr. and Mrs. Kingston-Persons. I did look it up because I was curious, and the hyphenated name here is because this is a second marriage for Suzanne, or Mrs. Kingston-Persons. And they do have a blended family. When there's a divorce, and particularly when kids are involved, it can be quite common for a divorce decree to stipulate that an individual may need to maintain life insurance with an ex-spouse named as a beneficiary. That could be one reason why Suzanne has coverage and Nick doesn't. Although, to my knowledge, we don't know any actual real details about whether Suzanne would have been required to maintain life insurance for the benefit of her ex-spouse.
Mr. and Mrs. Kingston-Persons. So you are here to take out a little life insurance on the Mr. today, huh?
Yeah, we've been putting this off for a while, and I just thought...
Excuse me for just a second. What it do, Flip? What? What? No, Flip. No. Yeah. Word? Oh, Flip. That is bananas, son.
Wow, this guy's ridiculous. Unfortunately, life insurance agents don't always have the best reputation, and he certainly isn't doing anything here to improve that. It should go without saying that this is simply a rude and very unprofessional way to behave.
That is bananas. Listen. I gotta hit you back. I got some people up in here. All right, peace. Mrs. Kingston-Persons, you already have a policy out with us.
I do.
All right. So, Mr. Kingston-Persons, based on a number of factors we take into account, this is what we're recommending for you. $500,000 term.
Okay, so a few different things to note here. First, he mentioned term life insurance. I think it would be helpful here to quickly go over the general types of life insurance that you can get. Broadly speaking, there are two major categories of life insurance. There's term insurance, which you can think of as more temporary coverage that is only in effect for some number of years, or the term of the policy. Commonly, this could be referred to as 10-year term, 20-year term, 30-year term, or whatever the time period happens to be. It is important to note that with term insurance, you are obligated to keep it in force for the full term. For someone who's in their 20s or early 30s, I would generally recommend buying 30-year term, but buying 30-year term does not mean you're making a 30-year commitment. It just means you could keep the coverage in force at the guaranteed premium rate for up to 30 years if you wish. The second broad category of life insurance is permanent insurance. Permanent insurance could broadly be types of coverage like whole life or universal life. Additionally, within these categories, there's also all sorts of further variations, such as fixed universal life, variable universal life, or indexed universal life. Now, I don't want to get too deep into the weeds of the technicalities of those different types of coverage, but personally, I do like to see that the agent is recommending term life insurance here. Generally speaking, I do think that term life insurance is the core type of life insurance that most people should have. Now, there are some very good use cases for permanent products. Some people may have an illiquid estate and they could need some cash to pay estate taxes. Or maybe it's a buy-sell agreement for business owners, as well as many others. But those tend to be more advanced or specialized issues. One of the main differences between term and permanent life insurance is that term life insurance is essentially pure life insurance, and it doesn't have any savings or cash value components that can build up inside them. And what that means is that you can get a lot more coverage for a much lower price with term insurance. For instance, if someone is in their early 30s and wants to buy a policy that would pay $1 million death benefit, a whole life policy, which is a permanent product, could be 10 times or more expensive than a term policy. So, in my opinion, the first policy someone owns, and really the core coverage that they have, should be term life insurance.
And, excuse me, why don't you just look this over? I gotta take this. Hey, girl. Yeah, where you at? Where? What you doing? You lie. For real? All right, send me something then. Send me something. You are crazy, girl. You crazy. No, I hit you back, all right? Yeah, send me the rest of that.
Seriously, this guy is awful. It's over the top, and I doubt even the worst agents are quite this bad. But please, if anyone is treating you even remotely like this, find someone else to work with. I don't think you want your family's financial well-being in this guy's hands.
Yes.
According to this, Suzanne is worth $750,000. How come I'm only worth $500,000?
Now, I'm going to jump in before this guy because I don't know how much I trust what he's about to say. It is a good question, though. How do you figure out how much coverage to buy? Broadly speaking, I think there are really three primary categories of what we would call life insurance needs analyses. First, a rule of thumb approach. Second, a human life value approach. And third, a capital needs analysis. Now, rules of thumb can be sort of the simplest strategy for estimating life insurance need. Most commonly, these types of methods will use some multiple of someone's income. For instance, Dave Ramsey recommends
10 to 12 times your income.
So if someone makes $100,000 per year, and if they're targeting 12 times their annual income, then they might want to seek out getting $1.2 million of coverage. The human life value approach is essentially just trying to replace all of someone's future income, or at least their economic contribution to a household, once you back out their taxes, personal expenses, and other costs that should go away with their passing. Since this approach is driven by how much future income would need to be replaced, as someone gets older and closer to retirement, their human life value is declining. What this approach doesn't do is account for other expenses or financial goals someone might want to consider, such as funding a child's education, paying down a mortgage, or other debt. And this is where a full capital needs analysis can come in. In addition to replacing someone's income, the capital needs analysis will also look at goals like mortgage paydown, funeral expenses, charitable donations, or any other goals that an individual might have. We then do some math to figure out what present value would be needed to fund all these goals in the event that either spouse dies prematurely. Personally, when I'm doing a needs analysis for someone, I'll consider a number of different approaches. First, from a rule of thumb perspective, I like Dave Ramsey's range of
10 to 12 times your income
as a starting point. Now, if you're young, you're healthy, and you're looking to purchase 20 to 30 years worth of coverage, I also think it can be very reasonable to go above and beyond this 10 to 12 times range in anticipation of future income increases. Honestly, if you plan to have a family and you're purchasing term life insurance when you're young and healthy, it's often so cheap that I don't see much reason to go below $1 million of coverage. Now, if you're a smoker or you have other health concerns, then policies start to get more expensive, and maybe it does make sense to scale back a bit. But I still generally like someone to shoot for at least 10 times their current income if it's affordable. If someone has a more complex situation, perhaps they're a business owner, a real estate investor, or someone who just has potentially major liabilities or liquidity constraints, then I start to favor more of a capital needs analysis where we're really breaking everything out to make sure you're fully covered.
Well, there are several factors. Age,
We're about the same age.
health,
Well, I'm as healthy as she is.
projected income.
I plan on making some money.
Okay, so the main factors he identified were age, health, and projected income. Now, for a needs analysis, age and projected income are both reasonable values to consider. So that makes perfect sense. However, the agent here is saying that health is a factor in the needs analysis, and that really doesn't make much sense. Regardless of whether you're using a multiple of income, a human life value, or a capital needs analysis approach, health is generally not a factor that's going to increase or decrease someone's need. What health does impact is the cost of insurance. The better your health, the cheaper your insurance will be. Now, one big word of caution when applying for life insurance. Lots of people end up disappointed with their insurance premiums because they either overestimated their health or they're using an online quoting tool that did a poor job of really honing in on their true health classification. The health classification scale that insurance companies use tends to look something like the following. At the highest end of the health spectrum is Preferred Plus, then Preferred, then Standard Plus, then Standard, and then Substandard, or what is sometimes referred to as Table Rated. Additionally, you'll also have a tobacco classification attached to this. Now, if we set aside substandard coverage, which itself is a bit more complex, someone who is Preferred Plus non-tobacco will get coverage at the lowest cost, while coverage would be most expensive for someone who is standard tobacco. So what can unfortunately happen is that someone looks up quotes at Preferred Plus rates, and then they end up actually being classified as Preferred or Standard Plus, and then feeling disappointed that the premiums ended up higher than their initial quotes. When I'm assisting clients with insurance, I like to take them through an initial health questionnaire to try and get this as accurate as possible before we get any quotes on the front end. But there are still no guarantees. Insurance companies will do their underwriting, which will include more detailed analyses of someone's health, things like looking at their MIB report, which, if you have one, is essentially a database maintained by insurance companies that acts similar to a credit report for life insurance purposes. Insurance companies will also look at prescription drug databases, and they'll also look at things like arrest records and driving records. Insurance companies are also generally going to take a closer look at your health situation and request to review your medical records, or even have a physical conducted where a nurse would come out to your home or office and conduct a physical that would also include blood or urine samples for lab work. But the key point here as it relates to this scene is that it doesn't make sense to say that his estimated need of $500,000 is driven by his health. His need shouldn't be driven by his health, but his cost of insurance certainly could be. And in some cases, if someone's calculated need is $1 million, maybe they'll decide to go with $500,000 because their coverage was otherwise going to be so expensive.
The numbers are what they are. And honestly, I got to tell you, her being worth more than you, it's probably a good thing. I can't tell you how many guys come in here, their wives take out policies on them. Next thing you know, no more guy. Ooh.
Okay, no, this is not true. Are there some cases where a spouse or someone has tried to kill someone else for life insurance proceeds? Yes, absolutely. But it's far from common. Additionally, the chances of this playing out in the killer's favor are very low. If there is anything even remotely suspicious about someone's death, the beneficiary of a life insurance policy is going to be one of the first people looked at. Furthermore, in U.S. law, we have something known as a Slayer rule that prevents a murderer from inheriting property from a person they have killed. So if a wife murders her husband, she's not going to get the life insurance proceeds, even if she's named as the beneficiary. Additionally, the Slayer rule applies to civil law and not criminal law, which is important because that means that there's a lower standard applied to establishing someone as a murderer. In criminal law, someone's guilt must be proven beyond a reasonable doubt. However, in civil law, the murderer's guilt would only need to be established at the level of a preponderance of evidence. So that would mean a wife could even be found not guilty of murder in criminal court and yet still not receive the life insurance proceeds under the Slayer rule.
Okay, for goodness sakes, can you please stop whatever that is and pay attention to us?
Yo, no disrespect, but check it. If you were looking at what I'm looking at, you'd be looking at it too.
Really?
On my mama.
All right, let me see it.
No, that's inappropriate.
You already crossed the line. I want to see why.
Don't show him.
I'm not. Wow. Yeah, that's impressive.
So, we good?
No, not quite.
I can give you a policy for whatever you want. I mean, I can give you one for $10 million. It just means more commission for me. But the numbers say $500,000, you know? Well, why don't you think about it and let me know? Excuse me. Oh, girl, you great.
Okay, just ridiculously inappropriate behavior. I used to think that Marty Bird from Ozark, watching an explicit tape of his wife having an affair during a client meeting, was the most egregious example of financial advisor behavior on TV. But at least he had the decency to keep it on mute and hide it from his clients. He was distracted, and that's obviously still very inappropriate, but this guy is openly distracted, rude, and showing them photos of whoever he's texting with. Ew. But that aside, there are a few insurance-related things to point out here. First, from an advisor's perspective, I think that recommending $500,000 of coverage for Nick and $750,000 of coverage for Suzanne was a really bad way to approach this. Unless there are health or other issues we haven't heard about here, term insurance is generally so cheap that this is a case where I'd probably recommend $750,000 for both of them. Anytime the discrepancy is less than, say, $1 million or so, I'm generally inclined to recommend that both spouses get the same amount of coverage to guard against exactly these types of feelings. So I would have taken a very different approach from the start and just recommended $750,000 for each of them. Second point here is that the agent said he could give him $10 million of coverage if he wants. While this may have been a bit of hyperbole, it's not true that Nick could receive as much coverage as he wants. Insurance companies all have their own standards in terms of how much coverage they're going to let someone get, and these limits will vary by age. But while exact thresholds are going to vary, here's a table from an article from Forbes that provides some common examples of maximum amounts of coverage that an insurance company might allow for different age categories. For those age 40 and under, you can often get 25 to 35 times your annual income. Age 40 to 50, you might get 20 to 25 times your annual income. Age 50 to 60, you might get 10 to 20 times your annual income. And age 60 to 70, you might only be able to get as low as 5 times your annual income. I don't believe we know Nick's exact age, but a fan site tells me he's in his 40s, so to get $10 million worth of coverage, he would probably need an income somewhere in the $400,000 to $500,000 range. I think he's really far from that, so not really true that he could get $10 million of coverage, but it's certainly true he could get more than $500,000. One additional note on income requirements: while the limits above can be a decent general guideline, there are also some exceptions, like someone who is a stay-at-home parent. Stay-at-home parents can get coverage despite perhaps not having any income that shows up on their tax return. Stay-at-home parents provide a lot of economic value to a household, and they would be expensive to replace if suddenly you had to hire out everything they were doing. For that reason, insurance companies will let stay-at-home parents get coverage. As a general guideline, stay-at-home parents can often get about 75% to 100% of the term life insurance that their spouse has. Now, another thing the agent mentioned here was his commission. The agent here is correct to say that the larger policy would generate a larger commission. For term life insurance, often 70% to 100% of the first year's premium is a common commission amount. So if a particular product pays 80% commission and the policy's annual premium is $1,000, then the agent selling that policy would receive an $800 commission. Oftentimes, there's little to no renewal commission on a term policy, meaning a payment that would be received in future years, and therefore it is primarily this upfront commission that generates the bulk of the agent's compensation. One reason why permanent products can tend to get pushed more than term insurance by people who are selling insurance is that both the initial commissions and the renewal commissions with permanent products can be higher. On top of that, since permanent insurance tends to be more expensive per dollar of coverage in the first place, the higher cost to get the same death benefit between two policies could mean a larger commission for the agent. Now, that's not to say that there's never a time or place to use permanent insurance, but just understand that this is a relevant dynamic for why some agents will push permanent products more than term products. Another quick note on commissions. Life insurance is heavily regulated at the state level by the state's insurance commissioner, and premium amounts aren't going to vary if you work with one agent or broker or another. I've run into people in the past who think they could save money by purchasing insurance online without the assistance of a broker. But the reality is that the exact same premium and the exact same commission gets paid out whether you buy a policy online or directly with an advisor you trust. Even the online providers will have someone appointed as the agent of record on your policy, despite the fact that you may never talk to that agent. So usually I do think it's best to go through an agent or broker who takes the time to understand your specific needs. If you're interested in getting coverage but don't know where to go, I'll include a link below in this video where you could reach out to me for assistance.
Hey, man, you need to fix those stairs outside.
Whoa, bring it down, Samuel L. What's wrong with them?
They're not safe for walking on. I almost tripped and broke my neck. No wonder you built a bar at the bottom of those stairs. Shoot, walking in here, you need a drink. You're not gonna have a business much longer if you try to kill everybody that walks in here.
So what's kind of neat?
Went to see the life insurance agent.
So what'd they put you down for?
This dialogue's weird to me. Who talks like that? I went to see my life insurance, so what'd they put you down for? Just weird.
So what'd they put you down for?
$500,000.
Not bad.
Except Suzanne's policy was worth $750,000.
Wow, go Suzanne.
Okay, again, kind of weird dialogue here. It's probably partially just because I see these numbers so much, but 500,000, 750,000, that's almost more of a rounding error than a meaningful difference when we're talking about affordable term coverage. I don't know that I'd ever be rooting for someone just because I hear this.
How am I supposed to get up every morning knowing that if something were to happen to me, it wouldn't make any difference because I am only worth a portion of what my woman is worth?
Nick is obviously acting very emotionally here. He's really caught up in the fact that his needs analysis came in lower than his wife's, so it's probably not worth trying to dig too deep into the facts of what he's saying. But his statement that if something were to happen to him, it wouldn't make any difference really makes no sense. The needs analysis here said it would make a difference. The analysis said it would make a $500,000 difference. That's not trivial. That doesn't mean he's meaningless to his family. But of course, none of that really matters because that isn't what actually has Nick worked up. It's not that he's worthless to his family that's bothering him. It's that he's comparing himself to his wife, and particularly because she's his wife, he thinks he should be worth more. These types of relative comparisons can be harmful and, frankly, dangerous in a ton of different financial contexts. Now, humans are social creatures. We look externally and we make comparisons. It's a whole keeping up with the Joneses effect. People wonder, am I making more than my coworkers? Is my house nicer than my neighbors? Are my friends driving a nicer car than me? The field of evolutionary psychology actually has a lot to say about why we make some of these types of comparisons. But it's also true that just because we might have a tendency to do something doesn't mean we shouldn't fight that tendency to do that. Or, as philosophers would say, an is does not make an ought. And that's true anytime you find yourself evaluating your financial situation based on what other people are doing rather than your goals and what's right for your situation and your family. Now, I've talked about this comparison dynamic in general, but I think it's even more potentially toxic when it happens within a marriage. When you're married, you're a team. You should always be rooting for each other. That's not to say that there isn't going to be conflicts. Marriage isn't easy, and we're seeing that right now very publicly in some of the purported conflicts that exist between Tom Brady's desire to continue his career in the NFL and Gisele's desire to see him go in a different direction. But at the end of the day, Nick and Suzanne here are a team. Nick needs to stop letting his ego tell him he should be worth more than Suzanne and instead focus on how they can lift each other up and what they can do together as a team.
Well, you're not supposed to wake up every morning thinking about that. But if you must, I suggest you fire off a note to Nick Cannon, ask how he deals with it.
Yes, I don't know the bartender's name here, but he is absolutely right. As far as bartender advice goes, I'd say this is pretty good.
And it's not about you, it's about taking care of your family.
Says the guy with no family and no life insurance.
You see, that's where you're wrong. I may not have kids, but I do have family, and I have life insurance.
Why do you have life insurance? All right, you're single. You have no kids. What?
As you might recall, I do have a mother. If anything ever happens to me, I want to make sure that she's always taken care of.
Wow, I'm actually really glad they touched on this. I'm a big fan of people getting some initial term coverage in place even before they would have what is traditionally thought of as an insurable need. Most people think, I'm single, so I have no need for life insurance. And while that's true in a technical sense in the present, I don't know if that's the best course of action if we're thinking about not just what's best for yourself today, but what's best for yourself long term. One of the best times to lock in coverage is when you're young and healthy. On top of that, as you get married, you progress in your career, you have children, life just becomes more hectic. Suzanne told us that earlier.
Nick, we have 2 kids, 2 jobs, and crazy in-laws. Our lives aren't going to get any less hectic.
I often run into people who at 35 have gained weight since they were 25. They possibly developed some health issues. Perhaps even other family members have had health issues that now need to be disclosed. On top of that, life's gotten busier and they just keep putting off getting life insurance. Even if they do get around to getting coverage, it's often quite possible that the total cost of 20-year coverage purchased at age 35 will be more expensive than the total cost of 30-year coverage purchased at age 25. Beyond that, though, I really like that the bartender is not just thinking about life insurance in terms of providing for a spouse and children. Obviously, that's a very core part of what life insurance can do. But even if you don't have a spouse and children, there might still be people or organizations in your life that you want to be able to protect and contribute to. As the owner of a life insurance policy, you have the right to change the beneficiary. You could initially name a friend, family, or charitable organization as the beneficiary of your life insurance before you have a spouse and children. And then you could switch the beneficiary to your spouse and children when the time comes. This is another one of the reasons that I personally bought insurance before I was married.
I do have a mother. If anything ever happens to me, I want to make sure that she's always taken care of. Plus, when you tell women that,
You would not believe.
Oh, come on. No. Hey, look. That right there is equal parts sweet, clever, and evil.
I know. I'm proud of it.
Okay, yeah, that's a little...
Ew!
I think Nick's description of that as equal parts sweet, clever, and evil is about perfect. But from the perspective of dating and finding a good long-term partner, there's probably something here. Now, no one is going to want to date someone just because they have life insurance. And I certainly wouldn't be a dork and bring up life insurance on a first date. But as relationships start getting serious and you start thinking about who you want to spend the rest of your life with, the fact that someone is the type of person who cared enough about their future family to purchase life insurance can be something that I think would be attractive to a partner.
I mean, the point is, your wife makes more than you do. It's not like you plan on ever benefiting from that, so what difference does it make? If I were you, I would concentrate more on the not dying part.
I would, if you would do something about those stairs.
You're cut off.
Again, yes, the bartender is right. His wife makes more than him. So what? They're a team.
So, what can I do for you today, Mr. Kingston-Persons?
Well, first of all, you can put a wet floor sign out there. How is it going to look for your company when somebody comes in here trying to protect themselves in the event something unfortunate occurs, and then something unfortunate occurs?
Oh, excuse me for just a second.
Don't answer that phone, man.
Yeah, but I just want to... I should swear,
Good. Thank you. It's about time someone puts an end to this nonsense.
Okay. Have a seat.
All right. I just need you to do one thing for me. And then you can talk on the phone all you want.
Okay, shoot.
All right. Now, see, what I need to know is, how much would I be worth if I was single?
Oh, listen, man. Between me and you, I don't know what you're planning, but I can't be a part of this.
So Nick is obviously not asking this with any ill intent. But just so that we're clear, if Nick killed his wife because of the Slayer rule that we talked about before, he would not receive any death benefit. What I'm not following here, though, is why Nick thinks he would potentially be worth more if he were single. That just doesn't make any sense. Having a family increases your need for life insurance. Nick is a stepfather to the children, Lindsay and Kevin. If he were hypothetically single, his need would go down, not up. Again, I'm just not following Nick's logic here.
I'm not planning to do anything, man. Look, I just need you to run the numbers and find out how much I would be worth if I wasn't married. Hey, stay with me.
Okay, hold on just a minute here. Let's see. So we're going to use your application, the same health record, same income projectors, no wife, and no kids. In that case, I would recommend a policy of $250,000 term life.
Yeah, it does make total sense that the need went down. I mentioned earlier, I'm still a fan of locking in some coverage when someone hopes or plans to have a family down the road. Without a wife or kids, his need for life insurance definitely went down.
What? Without my wife, I'm only half as much?
Okay, and the premiums are higher too. You see, most men that are single are more reckless than married men. So, listen, man, all I'm trying to say is having a wife makes you much more valuable than you would be if, something happened to her.
Nothing's gonna happen to my wife, man.
Okay, so there's a pretty significant inaccuracy here. The agent told Nick his premiums would be higher if he were single, but that's very unlikely. Marital status is not a major factor in underwriting life insurance. Insurance companies are much more interested in factors like age, health, sex, and engagement in risky behaviors. I just pulled up a couple different life insurance applications, and neither one asked anything about marital status. Now, it is true for some types of insurance, you might get some discount for being married, particularly auto insurance and homeowners insurance. But the actuarial differences in mortality between being married and unmarried is simply not significant enough to make a meaningful difference in life insurance underwriting. However, if you're a pilot, if you like to engage in high-risk sports like skydiving, scuba diving, rock climbing, or you smoke, use marijuana or illegal drugs, or even just have a blemished driving record, then those are all behavioral factors that can and will influence your insurance premiums.
Nick, what's bothering you?
Me? Nothing. I'm cool.
No, you're not.
Yes, I am.
Okay. Then why haven't you signed the insurance papers?
What is the rush?
It's just that it's been 3 days and you're not dead yet, so I figured there must be some other reason you don't want life insurance.
Why you always be trying to break people down?
Because I love you and I want the truth.
I'm glad she's following up and being persistent here. One of the frustrating things about circumstances where someone is avoiding life insurance is that the consequences of not having life insurance are ultimately felt by the surviving family members and not the person who didn't want to take the time to get it done. Suzanne and the children are who would ultimately be impacted by Nick's premature death, so she's absolutely justified in being persistent here. From a communication perspective, I do also like the fact that she's approaching this in a loving way. It's not an argument, she's not picking a fight over it, but she's holding her ground and being persistent in a way that does come across as caring rather than attacking.
All right. Look here. Baby, I would do anything for you and the kids, including risk my life to get life insurance.
This again, I don't get it. Come on, Nick. You're not risking your life to get life insurance. I don't know where that's coming from.
All right? But you're sitting there and somebody is telling you that your woman is worth $250,000 more than you. I was like, whoa.
Really?
Really what?
You're freaking out over a computer estimate?
Well, how would you feel if your worth was estimated at $250,000 less than mine?
I'd be like, yo, you got me, right?
Come on, it's not the same. I'm supposed to get you.
Oh, but I'm not supposed to get you. It's not a competition, Nick.
That's because you winning.
Yes. Yes, I am. But I'm not winning because I have a better life insurance quote. I'm winning because I have a better life. And that's because I've got you.
When it comes to their attitudes here, hers is much healthier about all of this. They should be a team. They are a team, and it's not a competition.
So are you saying you got me or you got me?
Both. Now, will you please sign the papers?
I'll do it tomorrow.
Good, because you ain't worth nothing if you messing with my money. Turn on the game.
Yes, ma'am.
Okay, so it seems like a good resolution here. I have to say, I'm still a little concerned. Anytime someone is going to do something tomorrow, particularly when it's as easy as signing some paperwork, I do worry that it'll just be the same story tomorrow. Just like estate planning, which is another area that's commonly put off, life insurance is something you just want to get done. If you need coverage, reach out to an insurance broker or financial advisor you trust and get it done. Don't wait. Don't put it off like Nick did. Just get it done. If you don't know who to reach out to, I'll leave a form below this video and I'd be happy to help you. But what concerns me even more about Nick's situation is that Nick's not going to be done with the process just by signing papers. When he signs the application papers, assuming this is a traditionally underwritten product, which would make sense given the other information we've seen in the episode and when it was filmed, he's still going to need to go through underwriting. That will generally mean a phone interview with the insurance company, a review of his medical records, and a nurse coming out to his home or office to do a physical. Once that's done, the insurance company will let Nick know which premium rate he qualified for, and they could even decide to not give him coverage. Of course, Nick isn't obligated to go forward with the coverage if he doesn't like the premium offered. And sometimes something new is learned during the underwriting that could lead someone to start the process over with another insurance company where they might be able to get better coverage or coverage at a better rate. But the main point here is just that the process isn't over. The process can realistically take 30 to 90 days to get all the way through underwriting. There's still some major hurdles to get through even after completing the application before his insurance is in force. And when someone has already expressed aversion to the process, then I'm even more concerned about their commitment to seeing that process through. Now, one thing that has been starting to change in recent years is insurance companies getting a bit more modern and trying to speed up the process. Nowadays, I would argue that there are really three main categories of underwriting. Traditional underwriting, which would include a full physical and everything else we've mentioned here. Accelerated underwriting, which still includes most of the steps, but might cut out the physical and labs, and as a result, could reduce the underwriting to 2 to 4 weeks. And automated underwriting, or what might also be known as instant issue coverage. Here, the entire process, from submitting your application to getting an approval, could take as little as 15 minutes. Now, I'm a huge fan of instant issue coverage. I love that it's finally making it to the marketplace. Companies can be a little bit more selective in terms of who they'll offer coverage to, so it can be a good idea to first complete a health screening questionnaire to make sure you'll have a high likelihood of being offered coverage. But so long as there aren't any concerns, I love that you can have an approval in 15 minutes or so. Of course, there are always pros and cons. If you're willing to go through the full underwriting process, you might be able to reduce your premiums a bit. It's also rare for instant issue products to be what's known as convertible, which is a technical term, which means someone could convert the term policy to a permanent policy at some point in the future. And finally, traditionally underwritten products might also have some additional features, such as return of premium riders, that would actually allow you to receive all of your premiums back at the end of the policy if you live the full term. I've actually written about return of premium term insurance and why I think there's some underappreciated benefit to that type of product in the right circumstances. But all of these benefits of traditionally underwritten coverage are really quite minor relative to the huge benefit of getting initial coverage in place. So even in cases where someone might want to eventually go with a traditionally underwritten product, I'm still a fan of first getting some instant issue coverage in place and then exploring options for replacing it. But if you take nothing else away from this video, please understand how important life insurance can be to your family. Do them a favor and get coverage. And don't be like Nick and put it off forever. Find an insurance broker or financial advisor you trust and get that done today. And if you aren't sure where to go, feel free to reach out through the link below, and I'd be happy to help out. But what do you guys think? Do you think I missed anything in Nick and Suzanne's situation? Would you have done anything different? Leave a comment and let me know. And if you enjoyed this content, please like, subscribe, and let me know if there are any movies or TV shows you'd like me to react to. I'm having fun putting this together and definitely plan to do some more. Thanks, everyone.